Hey, hello everyone. I hope you're all doing wonderful. It is the long Easter holiday, so you might not be watching this on a Monday, maybe on a Tuesday, Wednesday or Thursday. So here is my promise to you. We'll keep it short, we'll keep it high level, and we'll keep it actionable. So today we're talking about the European energy markets for the week starting 21st of April 2025. My name, of course, is Marcello Kolax. I'm the Managing Director at Clever Markets, and without any further ado, let's jump right into the markets. Okay, so as always, we are starting with a little bit of a disclaimer. Of course, everything you see here is not trading advice. It is just my humble opinion, and I don't really know anything at all. Okay, so first things first, we are looking at the TTF sentiment poll. So what I find quite interesting is that first of all, the participation has been a little bit lower, and that's simply because it's the Easter break and a lot of traders are on annual leave. So this time the participation was significantly lower. I think last week we had, also 2 weeks ago, we had 250 participants. This week around only 150, around 155 participants. But nonetheless, pretty good. We're doing pretty well. So what we can see is that there is a greater share of overall bearish traders. Can you see we increased from 27.6 towards 34.2, and the share is being taken away marginally from the bulls, but mostly those who have been previously indecisive. Of course, I can't really tell who shifted their opinion, but overall we can see that those who are indecisive, this has thinking that the market will move sideways, has decreased, and the bears have gained some ground. Okay, so what does that mean in practice? Okay, so here's the deal. All the markets are a little bit all over the place depending on when you're watching this. So this is recorded on the 20th of April, so on the Sunday. So some markets are going to be open on Monday, some are not. So TTF is going to be closed. So I'm not going to look at the hourly charts today. I'll keep it high level. So let's have a look at the overall markets. And first of all, I make myself a little bit smaller. There you go. Okay, so what we are seeing here is the TTF front month, the NBP front month. What way you go? There it is. NBP front month. We have the TTF front season and the NBP front season. We do have the EUAs. There you go. We have a little bit of German power. We have Henry Hub, and we are looking at Brent over here. So what we are seeing, just zoomed out, that all of these market, like in a grand scheme of things, we are still bearish, and that has not changed even with last week's 2 green candles, right? So look at this, like the flow of lower lows and lower highs is still maintained. So that means also for the hourly chart, we would be largely looking for the market to top out to continue the downtrend. So that's the kind of story I want to go with for this week. Now do keep in mind, we saw it last week already, it is the Easter break and there is going to be less volume. So what does that mean? So in practice, that means that there's not as many traders in the market who can help with the price finding process, with the directional decision making process. So I wouldn't be surprised if we see smaller daily ranges, maybe greater gaps, lower volume, a wider bid-ask spread, and there is a chance for us to maybe move a little bit more sideways. So this is something we definitely have to be aware of. So if you can, maybe now is the time to sit it out and get busy with something else. If you are so inclined, I don't expect any big moves to happen, so maybe this is more the chance for us to move into the smaller time frames. Hourly, even 15 minutes makes sense now to maybe make use of the smaller swings while the market continues to go nowhere, essentially. Okay, let's have a look at the TTF front month first. Okay, once again, we are starting on the weekly chart. There you go, zoomed out, and we understand, not so much, we understand that we have, like a couple of weeks ago, broken below the broadening wedge, which is usually a good bearish signal overall, so nothing to worry about here for the bears. They are in charge. Yes, we did have a green candle overall, but we are still continuing low, and you can see really low volume. So we haven't seen such low volume since December, at the end of December, when of course was end of year, Christmas, New Year, nobody is trading anyway. So that's why I would like to just everyone to zoom out, take a deep breath and see what's actually happening. Can you see we are looking now at the MACD, which is our momentum tool of choice, and the MACD in itself is like really useful. So it gives us in general two signals. It gives us smaller temporary or like immediate bearish or bullish signals when the MACD moves below its signal line, when the white line moves below the orange line. This is a preliminary bearish signal, or you can see here, right, the MACD moving above its signal line, white moving above orange, that is a preliminary bullish signal. Now the big signal is always given with a move past the zero line. So above is bullish, below is bearish. Momentum, there's a momentum tool, yeah. So how do we combine the two? So here's the thing, if we are in bullish territory and we get a smaller bearish signal, that means a peak might have been reached. For now, maybe only a correction, but we know that the bears are fully in charge if we move below zero. So I just want to make a point. So I'm taking this as an educational opportunity. Here we are overall bearish, right? Let's go here, something more extreme. So we are below the zero line, which means we are definitely bearish, but a little move with the MACD moving above the signal line, that shows us that there is chances of a bottom forming, and the bulls would only be in charge with a move above the zero line. So here we kind of faked out and then we continued. So what did the market actually do? Here, look at this, right? What am I looking at? Was it here? Down here. Okay, cool. So it was this big one here, right? So here we get a preliminary bearish signal, bullish signal, but you can see the market is still continuing lower from April 23 until May 23. So that's why we would never really take a signal just based on a momentum or a trend tool, because all these tools that we're looking at, they're just secondary. The one thing that really has to move first is price. Okay, so now let's have a look, right? So here we did get our first bullish fake out. When did we get it? Directly at the peak. So we are getting, there it is, here I'm looking at this, right? We are getting a bullish, there you go. We're getting a bullish signal as the market is topping out. So once again, the MACD wouldn't really have been useful. And once again, never ever make a trading decision just based on a tool. The tools are just filters. So when do we actually take these signals, right? So of course, here, look at this. Now I could pick something out where it worked out. I don't know. Here we crossed high, here we crossed higher, right? And then we did have the good bull trend. So you'll always find something. Okay, so that's why everything we have to take it with a grain, and we always need to have it confirmed with what's happening on the chart. So I'm not done with education. So let's have a look here, right? Here we got a bearish signal. Do we take this? Well, let's have a look at the chart, right? Oh, the market has reached the upper end of this well-established resistance level. Okay. Good point. Maybe we are topping out. We did get a bearish candle. So this is called a hanging man. And then the hanging man was followed up. First of all, the hanging man was confirmed with a weekly close below this, right? We got a bearish signal, and this whole thing is a bearish engulfing. So that's why we can take this bearish signal a little bit more seriously, right? Okay, so now we are here and the momentum is bearish. Any hints of bullishness? Well, not on the tool and not really on the chart here either. So downside is more likely to continue in the medium to long term. Now let's have a look at the stochastic. I like the stochastic, it's my favorite oscillator. It shows us if there's chance of the market potentially correcting the other way. So the underlying trend is bearish, also shown on the 8 and 12 exponential moving averages, right? Both are pointing down, looking pretty bearish to me. Are we expecting a little bit more of a correction before we continue lower? No, not so far. So that's why I'm saying maybe a little bit more sideways this Easter week before we continue lower. So I want to see a break below 32. And then we could reach 30, even 25 is nothing too crazy anymore. It's a trough from 2nd of April 2024. So I think all of this kind of makes sense. If you're so inclined, honestly, you could put on like some fib extensions here, which would also give us a target near 25. So let's have a look at the daily chart. So this is recorded once again on a Sunday. Monday is closed for the TTF. So if you're watching this on a Tuesday, Let's see what's happening. So once again, here my preferred route is a little bit neutral. Yes, of course, we have this trough here. A move below 32.55 would continue the downtrend with a flow of lower lows and lower highs, right? But look at this. At 31.29, we have the 61.8% FIB extension, which is the thing that I mentioned earlier, right? So down leg, corrective move higher, and then this downtrend will be replicated here in length. So this is only 61.8% of this down leg. If you want to have this down leg replicated, we would have to make it all the way until, there you go, 22.5, right? So the 25 up here on the weekly chart doesn't look so strange anymore. Okay, so for this week, probably a little bit of nothing. Even if we correct a little bit higher, maybe to the 37, yeah, okay, why not? That is best traded on the hourly chart, but I still believe that we could make it lower. And we know that the bears remain in charge below 31.29. And we know that my whole assessment of immediate bearish continuation is wrong if we push above 37. Why 37? You can see it's kinda like it's not a perfect peak. I don't like it that much, but it's definitely something that some traders are looking at. It's also a round number. So I say above 37, we might be dealing with a little bit more than just a correction, or at least here, let's look at this. I'm putting on Fibonacci retracements now. You can see I'm putting the 100 up here and I'm putting the 0 down there. So now the idea is, if the market, after the down move with the major direction, which is bearish, we are correcting higher, and you can see how the 38.2% FIB retracement, 36.58, somewhat aligns with the 37. Yes, it is a broad range, it's like a 50-cent range here, but support and resistance are never like thin lines, they are like areas, right? So 36.5, 37, if we top out in this area, then the bears will continue rather swiftly, but then I want to see a move below 32.55, otherwise more sideways. So this whole this whole upside correction will continue if we make it above 37. Then you can see we would be aiming for the 61.8% FIB retracement, like 39, 39.5, 40 maybe as a round number. It would be a pullback resistance from this old, there you go, broadening wedge, right? We would try this area again. So this is good because, once again, with TA we are not predicting. I don't know what's going to happen, and neither do you or anyone else. But we know that when this one thing happens, then we are more likely to move into that direction. And then we get targets, we get entry points, we know when we are wrong, right? This is what TA is for: trend identification, trade planning, and risk management. And right now we are helping with trend identification and trade planning. The risk management is up to you. Okay. Now, all right, this was all for the TTF front month. Hope you enjoyed all of this. This was, once again, a high level market outlook. I do understand a lot of you might be on holiday. Lucky you. I hope you don't think about the markets too much, and if you have to be on the market, my condolences. I'm right here with you. I'm by your side. Everyone, have a good start into the week. See you around, and bye bye.